Picture this. You're at a poker game, and for decades, one player has controlled all the chips. Everyone has to use their chips to play. But now, some of the other players are quietly setting up a completely different game at another table with different chips, different rules, and they're inviting everyone to join them. That's essentially what's happening in the world of global finance right now, and gold is at the center of it all. Let me break this down in the simplest way possible, because this story has everything: international intrigue, power plays, and a complete reimagining of how money works. And I promise, even if you've never cared about economics before, this will blow your mind. Here's where our story really begins. Imagine you lend your friend $100 and they give you an IOU note. That note is only valuable if you trust your friend to pay you back, right? Well, for the last several decades, countries around the world have been holding massive amounts of US dollars and Treasury bonds, basically IOUs from the United States. At one point, about 70% of all the money countries kept in their reserves was in US dollars. Why? Because everyone trusted them. They were considered the safest bet on the planet. But then something changed in early 2022. When geopolitical tensions escalated, the United States froze approximately $300 billion of another country's reserves. Now, regardless of your political views on that situation, imagine what message that sent to every other nation watching. If you're a country leader, you're suddenly thinking, wait a minute, if they can freeze the assets of a nuclear superpower, what's stopping them from doing that to us if we have a disagreement? It's like realizing the friend holding your IAs can just decide not to pay you back, and there's nothing you can do about it. This is where China enters our story, and they came prepared. For years, China's gold reserves barely moved. They'd buy a little, sell a little, nothing dramatic. But then, something changed. Around the time global trade tensions started heating up, China began buying gold like there was a Black Friday sale on precious metals. And here's the fascinating part. They weren't doing it secretly. They were making sure everyone could see exactly what they were doing. Why would they do that? Think of it like this. Imagine you're trying to start a new social media platform to compete with an established giant. You need to show people you're serious, that you have real resources backing you up. China was essentially flexing, showing other countries, look at all this gold we have. We're building something real here. You can trust us because we have actual physical assets, not just promises. But buying gold was just step one. What China did next was absolutely genius, and it's something that could fundamentally change global power dynamics. This is where it gets really interesting. So China had a problem. Other countries were skeptical. If you're India or Brazil or South Africa, why would you trust China to hold your gold any more than you trust the United States to hold your dollars? Here's China's brilliant solution. They built what some are calling the gold corridor. Imagine a network of super secure vaults spread across multiple countries. Think of it like a physical version of cloud storage, but for gold. Each vault is connected and verified, and countries can actually see and access their gold. It's stored in their region, not locked away in Beijing where they can't get to it. This solved the trust problem. It's like, instead of giving your valuables to one friend to hold, you're part of a group that has multiple safe deposit boxes, and everyone can verify what's in each box. Now, here's where things get technical, but I'm gonna make this super simple because this is actually the most important part. For the longest time, when banks held gold, they could only count it as being worth about half its actual value on their books. It's like if you had $100 in your wallet, but your bank said, we'll only count that as $50 in your account. Not very useful, right? But as of July 2025, yes, just this past summer gold got a major upgrade in the banking world. Now banks can count gold at its full value, just like cash or government bonds. But here's the catch. You still can't borrow against it the way you can with other assets. It's like having a house that's worth $1 million, but the bank won't let you take out a mortgage on it. So what's the next step? There's a category called high-quality liquid assets. Think of these as the premium VIP assets that banks can use for everything: lending, borrowing, and keeping the entire financial system running smoothly. Right now, US Treasury bonds basically own this category. But if gold gets upgraded to this level, and many experts think it's coming, everything changes. Here's where this all comes together, and why it matters to regular people. Let's say you're a country in Africa. You've got tons of natural resources, diamonds, gold, oil, but you don't have the infrastructure to extract and use them. You need to build ports, roads, power plants. Under the old system, you'd have to go to the International Monetary Fund or World Bank, borrow US dollars, and agree to all their terms and conditions. But under this new system China is building, here's what happens. You deposit your gold into this Shanghai Gold Exchange Network. China's development bank then lends you yuan Chinese currency against that gold. You use that money to build your infrastructure, and guess who gets the contracts to build it? Probably Chinese companies. You get your development, China gets influence and business deals, and the whole thing happens without a single US dollar involved. It's like creating an entire alternative economy that runs parallel to the existing one. Now here's where our story gets even more interesting. Do you really really think the United States doesn't know this is happening? Earlier this year, something unusual happened. The US started bringing its gold reserves back home from London, where they'd been stored for decades. The official explanation was something about tariffs and audits. But think about it. If you knew a new game was starting where physical possession of gold actually matters, where countries might demand to see and verify actual bars of gold instead of just paper certificates, wouldn't you want your gold close by? The US officially has about 8,000 tons of gold, the largest stockpile in the world. But if this new gold-backed system takes off, having that gold stored overseas suddenly seems like a really bad idea. It's like finding out your competitor is opening a gold-backed bank, and suddenly you're checking to make sure all your gold is actually where you think it is. Alright, let's talk about what this means in practical terms. Right now, big institutions, central banks, pension funds, sovereign wealth funds keep about 20% of their reserves in gold or similar hard assets. But new guidelines are suggesting this should increase to 30%. That might not sound like much. It's only a 10% increase, right? But we're talking about the entire global financial system. That 10% difference represents approximately $2 trillion in new demand for gold. And here's the thing about gold. Unlike dollars, you can't just print more of it. There's a fixed amount available. When $2 trillion in new demand hits a fixed supply, basic economics tells us the price has to go up, potentially dramatically. Some analysts are predicting gold could double in price within the next 5 years. I'm not making that prediction myself, but it's certainly plausible given these dynamics. So here's how I see this unfolding, and this is the part that really keeps me up at night in the most fascinating way. On one side, you have China and its allies building a financial system backed by physical gold, something you can see, touch, and verify. It's old school, but it's tangible. It represents trust through thousands of years of history. On the other side, you have the United States, which has been the king of paper money and digital finance. If the US is going to compete, it needs to play to its strengths. And what are America's strengths? Technology? Innovation? Digital systems? This is where things get really interesting. If China is backing its system with gold, the US might eventually back its system with digital assets. Think stablecoins, or possibly even Bitcoin. Both serve the same purpose in different ways. Gold equals trust through physical scarcity and history. Bitcoin equals trust through mathematical scarcity and transparency. Here's what makes this moment in history absolutely unprecedented. For the first time in modern history, we might be entering an era where countries have to actually compete over what money should be, not who controls it, but what it fundamentally is. Throughout history, there's always been one dominant reserve currency: the Spanish dollar, the British pound, the US dollar. One system ruled them all. But now, we might be entering a multi-monetary world where one system is based on gold, led by China and BRICS nations. Another system is based on digital assets, led by the US and Western allies. And for the first time ever, countries and even individuals might get to choose which system they want to use. It's like the world is splitting into iOS users and Android users, but for money. And just like phones, both systems can exist simultaneously and serve different needs. Now, before you run out and make any financial decisions, let me be clear about the timeline here. When I say this could happen quickly, I'm not talking about next month or even next year. In the world of global financial systems, quick means 5 to 10 years. These are massive ships that take a long time to turn. But on a historical scale, that's incredibly fast. The last major shift in global reserve currency took decades. This could happen in less than a decade. Think about how much the world changed between 2015 and 2025. Now, imagine similar levels of change in global finance between 2025 and 2035. So why should you care about all this? Why does any of this matter to someone who's just trying to pay their bills and maybe save a little money? Because this affects interest rates on your loans, the value of your savings, the prices, investment options available to you, the stability of your retirement accounts. When the fundamental plumbing of global finance changes, everyone feels it eventually. The people who understand what's happening early are the ones who can position themselves to benefit, or at least protect themselves from the changes ahead. This isn't just about gold. This isn't just about China versus America. This is about the entire concept of money being reimagined for the first time in generations. We're living through a financial revolution, but because it's happening in vaults and central banks rather than streets and town squares, most people don't even realize it's occurring. But now you know, you're ahead of the curve. The question is, what are you going to do with this information? Thanks for watching, and I'll see you in the next one.